Is anybody else waiting for the housing market to crash? I know I am. If we haven't met, I'm Eric with Jazz Wealth Managers, where we don't just invest your dough, we like to educate you on your dough. And to give you a little backstory, I bought a house or actually built a house in 2020, sold it in 2022, probably close to the top of the market. And now I'm sitting on some cash and waiting to see what happens. And it's a question I get with so many of our clients is, should I buy now or should I wait to buy a house? And, nobody has the crystal ball. Nobody really knows exactly. There's tons of videos out here that will tell you that the world's going to fall apart. And there's other videos that tell you it's not. There's data that goes both ways. And so my job as an advisor is let's just remove the emotion. Let's remove the thought of this video or that. Let's look at the data. I'm just going to show it to you. I want you to make the decision on what you think is going to happen. I'm hopeful and optimistic that I'm going to find some opportunity on my side to hold off and maybe, find an opportunity with a house at the same time. Maybe that you think that now's the time to buy. So let's just take a look. Take a look at this screen right here. So this one is U.S. housing starts. So if we're looking here at current data, this is telling you that, the housing starts are up. Now, it's a little bit misleading on if you're looking at it's up 9.77%. It's actually a month over month thing, and it's actually lagging. So it's not looking at the exact data today. It's looking back 1 month. This was from February's report that came out. And so if you take a look here, you can see actually if we look at like a 3-year versus just a 1 year, or if we look at a 5-year, we can see different times in the housing starts and how this goes. So at one point we could say, okay, well, 9.77% here. But if we look at all of the different times, there's a lot of times that, there were a lot lower housing starts, but there were times where there were a lot higher housing starts as well. March of 21, there was a lot of housing starts there. June of 20, there were a lot of housing starts. So it's weird how this chart tends to look. So this is one that I feel like can really be talked about, but not really focused on too much. Also with this chart, what a lot of people don't talk about, and part of the numbers there with the analytics is that a lot of those U.S. home starts were coming from commercial properties because it was single-family residences such as apartment complexes. So that's coming into play too. That's a home for somebody. And so it's not just that we're looking at actual individual homes that people are going out and building. Now, another one that really you've got to look at when it comes to, what's going to happen. And well, that's, how much debt do people have right now? Do people have the money to buy a house right this second? This chart, I'll be honest with you, kind of scary to look at. If we're looking right here, this is showing from, let's say 2015 all the way up until 2020. We have 16.9 trillion in U.S. total household debt. That's student loans, that's auto loans. They're taking this report and they're really looking, I believe it's Equifax that they're looking at here with this one. And they're saying, okay, let's take a survey of a large number of people and try to really figure out of all of these people, how much debt are they carrying to help calculate this number. And if we look back here and let's just say 2019, they were looking at $13.67 trillion of debt, but 16.9 trillion. That's a lot more debt that is coming into play here. So it's something we have to truly look at. This actually will show us on this chart going back all the way to 2008 that in 2008, the debt was 12.45 trillion. Now, granted, if you go back to 2008, your average income was a lot lower as well. Now we have a lot more debt, but we have a lot higher income. Kind of offsets a little bit. So different things to think about when you're looking at these charts. Now let's look at another one. This is the one I think that surprised me personally the most, and that is the U.S. Fixed Housing Affordability Index. Geez, try to say that 5 times fast. So if we're looking right here at this doesn't go back a long, long ways, but what we're looking at is, let's just say, in 2014 roughly, again, we've got this weird like up and down with this chart, but the idea is, look right here at, let's say December of 2020, when everything was just starting to really just take off to the races with the housing market, and how quickly affordability for housing has come down so much. And so I've said steadily, talking with friends and looking and just looking at the overall markets and saying, how are people affording this? You're maybe asking that same exact question. And if we look at this chart, maybe they aren't affording this. And that's exactly what I'm looking at here with this one. So that's nice to see. Maybe there's going to be some opportunity. Maybe people are stretched and they can't afford a house. That's one way to look at this. Another one is U.S. existing home sales. Now, if we're looking at the U.S. existing home sales, this goes back to, just before 2000 and 1999 on this chart. But you can see the run up in home sales before the '08 crash. Over here, and this is all the 2008 crash, and look at how far things fell. Then we kind of jump up a little bit, jump down, but steadily we went up over here until, that 2020 COVID shutdown. Home sales, everybody just hit the pause button for a minute and they really freaked out. But then things rallied right back. But then now we've started to, again, slow down. Now, again, this chart is a bit misleading because it's saying we're down 12.43% in home sales, but that's really looking at a comparative in recent history. Because if we look here, year to date, we're actually up 13.65%. But if we start to calculate in a 1 year, we're down 17.77. I don't know if you heard that horn, but somebody's driving by blowing a horn as we're filming this video. So they're happy to hear us. All right. So that's what we're looking at there with this chart. Now let's look at the truth. And this is what I think is the tell-all of everything. And that is U.S. existing home sales. And when it comes to a recession, I can only go back to the early 2000s with this. But if we're looking at this data, yes, in 2008, we had a large crash of the housing market with the mortgage crisis. And then in 2020, when what was the blip of a recession there, we did have the stop. But again, it was because of COVID. Now we're looking at the other one we have to compare to is in the 2000s. And with the 2000s recession, as you can see, there wasn't a massive drop in home sales during that time. And so if we step into a recession, are we going to see a large drop in home sales or not? If you look at, the affordability index, I'd lean towards yes. If you look at, the debt ratio when it comes to the amount of money people have in debt in houses right this second, or not in houses, but just in general, absolutely. But if you look at the chart, and the chart shows that oftentimes in a recession, it could lead into housing prices going down, but in early 2000s, not. It's really a toss-up. So again, I just wanted to show you the data on this because I'm trying to figure it out myself. I figure you might be as well. I hope it was helpful. If you want to check out a good financial firm, I say we're good. So check us out, jazzwealth.com. We'd be happy to help you.
Thanks for watching. If you want to watch more FinTips videos, click here. Be sure to like and subscribe also.